I must start by saying congratulations on very good numbers.
Thank you.
What drove this increase in your pre-tax profit?
Thank you very much. The profits were driven by two major parameters. The first one is continued growth in interest income, rising from an enhanced margin, and of course the growing balance sheet from the new subsidiaries. So we could see income going up consistently.
One of the things I must immediately talk about, and which is current right now, is definitely interest rates. They have been coming down after the latest CBA rate cut, but not quite as steeply as many people might want. What is your long-term view on this?
I think it's the process of the interest rates going down.
Yes.
If you look at equity today, announced a new base rate at 20%.
Right.
So again, showing setting the signal that we are in a downward trend. I am sure once the central bank sustains the pace of education, then the banks will follow. I think people are being impatient, yet it has been less than a month since the central bank indicated the direction of interest rates.
Because many analysts, after seeing your numbers, worry that the cost of funds is still too high.
Yes, the driver of the performance have been cost of funds. They
Yes.
had more than doubled
Right.
Over the period. But you'll notice that that was being driven by the high central bank rate. So as central bank lowers its interest rates, and particularly for treasury bills, then that will quickly reprice the liability side. And then that will enable the banks then to readjust the asset side of the balance sheet.
How does Kenya perform right now vis-a-vis your subsidiaries in the region that have also begun to pick up?
Kenya seems to be performing better than one would expect.
Right.
Looking at the microeconomic environment, one would expect that Kenya would be performing very poorly. But it appears that the trailing positive impact of the stimulus projects that had been initiated has held the economy up. I think also the new development where we are seeing a lot of international organizations relocating in Nairobi,
Yes.
a lot of fund managers starting to operate in Nairobi seems to be providing some stimulus. At the same time, the Vision 2030 projects continue to be enhanced and new ones being started. Again, the supply side seems to be stronger
Right.
than we could have expected.
You have the largest number of depositors in the country, but there's still a large part of the population that is unbanked, which is where the agency banking model comes in. Is that helping right now to contribute to your bottom line?
It's sure, with 7.5 million customers, again, that spreads particularly in terms of deposit. We
Yes.
see very difficult microeconomic environment,
Yes.
but okay, marginally growing deposit base, suggesting that the numbers are coming into play.
Do you have any serious concerns about the non-performing loan book?
We have seen a slight stream. For the first quarter, non-performing loans were at 2.7.
Yes.
That has jumped up to 3.2. And we are hoping that the relief will come now with the lowering of interest rates.
The government paper has been a darling of many of your colleagues and in the banking sector because of the relatively better yields, considering everything that was happening. Is that still a position you hold?
That has not been the case for Equity Bank.
Yes.
If you look at Equity, government paper contributes a negligible amount.
Yes.
Over 80% of our interest income comes from lending. We believe in supporting the real sectors of the economy. And being a private sector player, we feel it would be unfair for us to shift money from the private sector
Right.
to the government.
Which means you welcome this recent move by Treasury to stop borrowing from locally to make sure that the private sector gets a bit more of that credit.
Absolutely, and that also helps us to fast track the reduction of interest rates.
Where do you see the growth coming from going forward?
I think growth going forward will come principally from enhanced activities. We are seeing as interest rates go down, most likely the private sector that had suspended their projects will now restart them.
Yes.
And that is likely to be I think the second phase of growth will also come from the benefits of the projects, the massive projects that the government is investing in. The multiplier effect
Yes.
is likely to trickle down to the economy.
Do you give us a sense of your outlook, how you're likely to end the full financial year?
We see the second half being better on account of 4 things. One, increased government expenditure. If you look at the infrastructure, it received a budget of 267 billion.
Yes.
We see reduction in inflation from near 20, I'm sure, to below 10% soon because of the recent reduction in oil prices. And we are also seeing signs of declining interest rates, allowing more uptake on the credit side.
Right.
And of course, there are all indications that in the medium term, the exchange rate will remain stable.
Do you have any serious concerns about any risks on the economic side of things?
I think there are concerns that the economy has not fully stabilized.
Yes.
The reduction, for instance, in the import and the deficit is still not significant enough
Right.
to give a confirmation that the exchange rate will be stable in the long run. So again, that really provides a challenge. And the last one is the global economic environment. Europe seems to be becoming more and more unstable, creating an impression of instability.
Yes.
And the question of the impact and transmission of that instability into the rest of the global economy, that is really hanging out there.
All right, we'll leave it there. Asante sana, Dr. Mwangi.
Thank you very much.
Appreciate your time, Dr. James Mwangi, Group
you.
CEO of Equity Bank Group.